Hello and welcome to another Elliott with analysis. This video is really more of a extra update, right? For the a few of these ideas, these indices that I have published, right? The reason is because I saw some interesting patterns coming out. I thought it would be of some educational value, right? Let's start with the Nikkei 225, right? The my last two update is also the Nikkei 225, right? So over here, there's on the 26th of March, which is yesterday actually, right? Where there is I noticed the ending diagonal over here, right? And I say that it's a good shot, okay, good opportunity to short. Then just today, 6 hours ago, we have completed this 5 wave down after this ending diagonal, and then I note that there is ABC, right? So it's good to add on to a short if you haven't or if you have closed out or you haven't have any position. It's a good place, right? And over here you can see this ABC, right? As it was forming, and you see over here, right? What happens is that after this move down, there is this where I plotted A B C D E, right? So this is what I would say is a good educational value, because if you see this small one versus this big one, right? Now, obviously, this is an diagonal, and this is not an diagonal, right? But it shows the fractal nature of the financial markets, right? So this is something I just want to show everyone, which is the fractal nature of the market, right? You have the big one and you have small one. But okay, most really speaking, fractal nature will be, within this small one, is you see maybe another small one, right? But usually it's a big one. You will see within a big one, you see a small one. Like over here, 1, 2, 3, 4, 5, and then 1, 2, 3, 4, 5, right? That's overlapping kind of wave structure. Okay, right. So this is similarity. So usually for a technical trader, what we do is that if we see a pattern like this, we recognize it, right? And then we move back to a time historically, right? And see whether this kind of structure, what is the next move of the market, right? So over here, it comes down, goes up, and then come down again. So what I will do is, usually I'll do this, and then you see that, oh, if it comes down already and then you retrace, how much we retrace? Slightly above 38.2%, right? So usually a smaller one might see a bigger retracement, lah, right? So over here it has already reached 50% retracement, right? The retracement itself usually they don't follow a regular pattern or what. So yeah, so I would say that this is will still be a good shot, and your not now if because of this pattern formation, you can actually shift your stop loss down, right? So you reduce your risk. Okay. For anyone who is trading Nikkei, so if you have entered just now you can reduce your uh you can make your stop loss tighter right now. Okay. Right. Next one I want to talk about is Nasdaq. Now for Nasdaq, we need to look at the bigger picture again, right? So Nasdaq is top of channel short the last time, right? So this one is on 2 days ago, right? So it's about on the 25th, right? So this E is actually here about 20250, right? So what happened is that it actually breached here, right? And then it comes down. Okay, so I was 1 day early, right? It breaches here and then it comes down, right? So the breaching itself is more of a trading risk management, but the idea is still valid. Okay, because you see uh, the shape of this form ABCDE is still there, right? It's just that it extends a bit, breaches the top of the channel and came back down. Now the next question obviously is this still a short, right? So if we look at this microstructure over here, you see that it has already moved down, right? And you can count this as a 1, 2, 3, 4, and 5, and then this retracement up. Now this red line is I draw this red line because I think that there is some significance over here, right? So this red line, you can actually draw from here also, right? You see that this price point itself, in the near past, it was actually a good support and resistance zone, right? This price 1, 2, 3, 3 times, and then this small one for usually I don't count such a small one, yeah, but it shows the significance of this price movement around this price 199.50, right? So I would say that this is still a short, right? And if I have to short this, I shouldn't say I have to, but if I short this, what happens is that now, for now, I will just put it over here first, the stop loss, right? But there is a possibility that how this will unfold is that you may do a ABC, right? Um, so we need to study this move up, whether it's at any Fibonacci levels, retracement level, right? But obviously, this is not Fibonacci is not that important at this point in time, right? Because of this red line price study that I did, right? And 23.6% replacement uh, is not very convincing. But if this really goes down, it shows that the entire price is very weak. Okay, that is why it only retraced 23.6%. So as I explained in the previous video, I think it's over here. Yeah, if you see a weak retracement, usually the down move is stronger. So this will extend beyond a 1 to 1. So if you do a Fibonacci extension, a 1 to 1 is here, right? You see that there's an important support over here, which is 199.50 around there, right? But over here is actually the more important one, right? Which is 19164. So if I short this, my price target is actually around here, and then I'll start to notice whether there's any kind of a resistance or rather support over here, right? Around this price. Yeah, but this price is good to do a reduction, right? So if I put it over here, I would say place to reduce short position, right? Okay, and then over here will be personal target, right? I mean, do I want to go all the way down to 1.618, actual 1.618? It depends on how you move, right? But once you have reduced this position, you will shift your stop, and things actually will start to uh, be more carefree, in a sense, because you have reduced your risk, make some profits, right? If this turns out to be profitable, always the most important is where you place your stop loss. Okay. So this is the picture for Nasdaq. Now, Nasdaq and S&P, you can actually complement the analysis together. Why did I say that? Let's look at the S&P. Now, for this S&P, you see this ABC move up, and if we come inside here, you see that S&P actually retraces 38.2 and is nicely at 38.2, right? If I need to adjust this a bit up to match the price, right? So yeah, sometimes chartists can be a bit anal regarding this kind of price accuracy, right? So S&P has reached 38.2, right? Even though similarly it doesn't have a tree wave, right? It's just a single move up. To me, it is still a short still, and the stop loss will be the recent high here, right? Maybe a bit more. Okay. Um, as for the price zone, I don't really see much of a special price around here, right? But just purely based on this Fibonacci and the fact that it has this false breakout has already come back in, right? I think it's a short, and because there is a high beta between S&P, Nasdaq, and I would even say Nikkei, right? Um, yeah, so that is why I think the S&P is still a short. So summary: S&P, Nasdaq, and Nikkei are all short. And then you have Hang Seng. Hang Seng index short, right? I have put it here. That is a short, right? So a wave update here would be this recent move is a WXY. This is probably a fourth wave, right? So where's the third wave? Third wave is probably here, right? Fifth wave, right? There is not too much of a precision here for the five wave, right? It could be here, one, two, three, four, and five. Now the only flaw with this 1, 2, 3, 4, 5 is that this wave one is too short, right? What do I mean by that? Is if you do this wave one and then you try to extend it, you realize, you can't really extend that much, right? Then you actually need to make it even more, right? You see that there is some relationship over here, okay, that it fits nicely here, right? But I usually don't like anything more than 3.618. I will find that the wave one that I use is too short, but it's just a possibility, right? And then this WXY, okay, no flaws here. Okay, now if you go into the 5 minutes for this is where I do have a problem here. But even though I think that this is a WXY, now it's a short. The problem lies with this. Before I go into the problem, the other thing is the price has already moved into this wave W, right? So I know that there is no support here to push it up, right? To invalidate my count. The problem with this is that there is just too much overlapping, right, within this down wave itself. Okay, so how to count this wave? Naturally, this is wave one, wave two, right? Wave three, wave four, and wave five. Now let me explain this first. The problem with this count is that it looks like it's more three wave down than it is five wave down, right? But the thing about low time frame is that there's just too many noise, right? So usually I try not to go into anything below hourly, right? So what I mean by that is that once you go into hourly, then things just comes together. You don't really see that there's a problem, right? You do see a lot of weeks over here, right? Weeks. So it tells you that there's something wrong in this wave itself. Then you go down, whereas this one is why is it so jaggedy when you move down? Okay, so for this one, I would say it's still a short, right? But you need to be careful of any rebound. Okay, that means that if you short this, and let's say you can't wait, short this, you need to find a good place to put your stop. Now, obviously, the best place to put your stop, right? If let's say we short here, the best place is here, right, above Y. Okay, but the other good thing about this kind of structure is you can actually pick any of these points, right? These points of rejection as a stopping point, right? You can put it over here. You can put it over here, right? Or you can even use Fibonacci retracement to find any point. So usually what I do is that I'll find the points of rejection against the Fibonacci number. So to me, the logical point to place this stop is this 50%, right? Slightly higher, okay, because there are enough resistance over here. So if you short Nikkei, sorry, Hang Seng, this is my suggestion. And the price target is here, right? 23201, so about 360 points, right? This on the 5 minutes. If we go into the hourly, because this big move, I think it has completed, right? There are a few more targets. One is this, because this is kind of like a strong, maybe I'll just put it here, more conservative. This is more of like a strong support. And the next one is actually around here, right? This is some Fibonacci levels that converge, yeah, but this is not so important because we study the price here and we realize that actually it's not there isn't really much of a support or resistance here. And yeah, but for a good target, this will be another target if it breaks down cleanly, right? So this is for Hang Seng. Now this, the purpose of this video is really more on educational value, right? And maybe just a bit of an update to all these indices that have been publishing the analysis and calling for the shots. Yep. So that's it for now. Thank you and good luck in your trading. Remember to keep your risk tight.